Hello friends, a very warm welcome to my channel. In this video, we are going to talk about a company called Axis Gates Technologies. This company is into defense and aerospace, which are two sectors right now into limelight. The company has totally revamped its leadership team and has set a massive vision for 2030. Before we move forward, if you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. This is the small disclaimer as per SEBI regulations. You can pause the video and read it. This will be the flow of our discussion. We'll talk about the business model of the company in brief. We'll look at the stock performance in the last few years. We'll understand the financial performance. We'll understand why the stock has given a sharp rally in 2025. We'll look at the outlook of the management going forward. We'll understand the risks, valuations, and then form an overall view about the company. So Axis Gates Technologies is an engineering services company. So whenever somebody wants to design, develop, or test any engineering product in defense, aerospace, automobiles, or any sector, they can approach Axis Gates and they can do it for them. It's a technology-led, design-led manufacturing company. It is not into full-fledged manufacturing of products. They do only prototyping, and the large-scale manufacturing is done by their client themselves. With a couple of new initiatives which the company is taking now, they would also take up manufacturing in small batches as well as the MRO activities. So they manufacture products and systems in aerospace, defense, heavy engineering, automobiles, energy and medical devices. If we look at examples, they make components and products for fighter jets, helicopters, unmanned aerial aircrafts, and various other defense systems. Coming to the segments other than defense, they make industrial machinery, construction equipments. In automobiles, they make chassis, powertrain systems. They are also into renewable energy equipments. If you look at the product or the segment split, 31% of the revenue comes from the aerospace segment. Defense constitutes almost 30%. And electronics, semiconductor and artificial intelligence, this is one of the emerging segment of this company, constitutes about 12%. So these three are the core business verticals which the company wants to focus on going forward. And these three segments have the highest margins also. Now coming to the non-core verticals, which is heavy engineering and auto, which is 23% of revenue, and energy, which is 4%. The company will grow these as well, but the main focus would be on the core segments. Now, if you look at the geography-wise revenue split, US constitutes about 23%, Europe about 36%, Canada 4%, and APAC countries about 37%. Now, if you look at the stock performance, for a very long time, the stock was in a consolidation mode and did not give much of returns to its shareholders. In 2023, it gave a massive breakout and reached up to 850 zone. And then there was profit booking seen and it consolidated around 400 zone. But with the recent improvement in results, with the recent announcements of strategic tie-ups with the company, with many other foreign companies, there was a massive breakout again and the stock made a fresh new high of 1500 rupees. In fact, the stock nearly doubled in 2025 itself. They also raised a QIP fundraising round at 662 recently. So this price can also be taken as a benchmark for you as an investor while you analyze this company. If you look at the revenue, the growth has been steady. They did a revenue of about 524 crores in FY21, which rose to almost 1031 crores, which is double in 5 years in 2025. So there was a steady increase in revenue in the last 5 years. But EBITDA did not see a consistent increase. They did a 65 crore EBITDA in FY21, which increased to 146 in FY23. And still in FY25, the EBITDA remains flat. The adjusted EBITDA, if we remove the one-off items in FY25, comes to 156 crores. EBITDA margin has also not consistently expanded. They did a 12% EBITDA margin in FY21, which increased to 18% in FY23, then dropped to 14% in FY25. If we remove the one-off items, the adjusted EBITDA comes to 15%. The management is confident of expanding this EBITDA margin by 300 basis points in FY26. The return ratios are not very impressive. The ROC is about 13% and ROE 12%. Hopefully, with the better growth in the coming years, these return ratios should improve. A part of the promoter holding of 8% is pledged, and the receivables of the company are high, and this should be monitored going forward. Cash flow wise, they are making good operating as well as free cash flows. And in 2024, in the QIP fundraising round, they have raised 220 crores at 662 rupees. Now, what led to the sharp rally in the stock recently? The results improved. That was the fundamental trigger. The company won certain large defense orders. They did some strategic partnerships with foreign technically sound companies. The defense and aerospace came into the limelight. They changed the leadership team and came up with a fresh long-term vision. With the QIP round, the institution started taking interest in the company, and all these factors led to the re-rating in the valuations of the company. Before we move forward, if you are not a part of our Telegram channel yet, do join today by clicking the link in the description button so that you join the correct Telegram channel. It's a free channel, and every day morning I share my views on the markets. I also share important news and views so that you can manage your portfolios effectively. More than 7,000 people are daily in touch with me through my Telegram channel. So, what is the growth outlook of the management going forward? Dr. Sampath Ravi Narayanan has joined the company back as a non executive chairman. He was the key person to grow this company during his earlier tenure by 60% CAGR. And with his coming back, the investors' confidence has boosted a lot. Along with him, he has also brought his leadership team, the key people who worked in his team, who led the company to the growth in his earlier tenure. And together they have set a target of 9,000 crores revenue by 2030. Mind you, in FY25, the company did a revenue of about just 1,000 crores. So 9 times the FY25 target, they have set it for FY30. They also expect the EBITDA to further expand to almost 24% by that year. Now, how are they going to do it? Right now, the company gets about 80% revenue from services and 20% revenue from products and solutions. They are going to invert this and focus more on the products and solutions. They will innovate and make new products, and going forward, in the long term, they will make 80% of revenue from products and solutions and 20% from services. They have taken a couple of big initiatives. They are starting a 20-acre campus called DAC, which is Devanahalli Atmanirbhar Complex. This is near Bangalore. So here they will be developing several defense and aerospace products. Another initiative is a missile integration facility which they are setting up in Hyderabad. In FY26, they are targeting a 20% plus revenue growth for the overall company and much higher growth for individual defense and aerospace segments. And the profitability, that is EBITDA, they expect to expand by 50% compared to FY25 in FY26. In terms of margins, they expect a 300 basis points expansion in FY26. These are the some big recent partnerships which the company has done. They have signed an agreement with a company called Indra. It's a European global leader in defense and aerospace segment. Another strategic agreement was signed with a company called Aldoria Forge. This is a European company in space surveillance. Another strategic partnership with MBDA. This company is into missiles and missile launchers. So by this you can understand the company is actually moving towards their 2030 vision. Now let us come to the valuations, which is the most tricky part. The stock has got re-rated in the last 5 years. If you look at the EV and EBITDA metric, it has gone up from just 5-10 times earlier to almost 40 times now. So right now it trades at a price to earning of 77, price to book of more than 9, EV EBITDA of nearly 38x, and market cap to sales of 6x. So the re-rating in the stock is already over, and the valuations are not cheap now. Now, what are the possible risks of investing in this company? Historically, the performance of the company was not very consistent. If you look at from a 10 years perspective, so that could be a risk, which is an execution risk going forward. There are certain customers from which the company gets major revenue, so there's a customer concentration risk. They are starting 2 new facilities in Bangalore and Hyderabad, so execution of those facilities could be a challenge. They are transitioning the entire business from services to a product business, so that would not be easy for a company. Defense, aerospace, all these sectors sound very good and impressive, but we should also remember that these are heavily dependent on the government's decisions. And valuation wise, if somebody is entering at these levels, there is a high risk in terms of valuations. So now that you've understood the business model of the company, the growth aspects, the valuation, the risks, what is an overall view on the stock? If you're already holding this company, you should continue to hold, because the turnaround has just happened. The company has just started taking new initiatives, and you should give them time for a couple of years to judge their performance. But if you're looking at a fresh entry at this point of time around 14-1500 levels, then as the stock has given a very sharp move recently, you should allow it to cool off and then gradually accumulate in a staggered manner when the valuations normalize. So that's about Axis CADE Technologies. I hope you like the crisp analysis. I have tried to cover only the important points in this short video. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Do join our Telegram channel by clicking the link in the description button. Thank you for watching and have a wonderful day.